Good morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm your host, Jen Sanasi, here with my co-host, the TIE's Director of Content, Lawrence Lewiton. Good morning, Lawrence.
Good morning.
How are you doing this morning?
I'm okay.
Just getting through it. All right, let's take a look at the markets, starting with Bitcoin. The CoinDesk Bitcoin price XBX index is currently at 29,335, doing a whole lot of nothing for what feels like the millionth morning in a row. Let's see if Ether is following suit. The CoinDesk Ether price ETX index is at 1,840. Doing much of the same thing. And the DeFi index, the DFX, is at 123, down almost 0.5%.
123.45.
That's it.
That's
it, Lauren.
It's like Sesame Street. It's like if Sesame Street invented an index, that's what the price would be at all times.
I love that. Oh, gosh. All right, Lawrence, let's take a look at our top story. The chill of crypto winter continues to drag on, with crypto custodian Prime Trust filing for Chapter 11 bankruptcy protection yesterday. This comes after CoinDesk recently reported that the company looked poised to do potentially massive layoffs. Recently, BitGo also terminated a deal to buy the company. Lawrence, what do you make of this? Just feels like another one. Like we talk about this story often, but yeah.
Yeah, Prime Trust is one of those stories where, you keep hearing these things about, maybe they were paying off their withdrawals with the new deposits. We know how that goes.
We do know how that goes.
Yeah. And that they had difficulty, of course, they had difficulty accessing some old wallets. That makes it hard to get your money out. Allegedly. And questions about what they had what their wallets were actually invested in, things like that. So overall, this is a ugly case. It's probably going to be very messy. It's going to be some time. Prime bust, I think, is what Bitfinex on Twitter calls it. And I think that name's going to stick. The company is now neither Prime nor a trust. Nor can you trust it.
It feels
allegedly.
Like each story about Prime Trust was a step closer and closer, maybe, to the news of today. We heard state regulators were trying to shut them down. Then a subsidiary filed for bankruptcy. We'll have to wait and see.
More and more negative. There's a lot of negative headlines coming out of crypto. And again, as I've mentioned before, long-term adoption depends on people having trust. And until the scammers are shook out on some level, this unfortunately has a long-term detrimental effect on whether or not the average person decides to use crypto in their day-to-day lives.
Lawrence, you are completely right. Let's turn now to the state of crypto.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
All right, Senator Cynthia Lummis, some crypto lobbying organizations, and a group of professors are calling on a federal court to dismiss an SEC lawsuit against Coinbase. Joining us now to discuss is the Chamber of Digital Commerce Vice President of Policy, Cody Carbone. Welcome to the show, Cody.
Hey, good morning, Jen and Lawrence. Thanks so much for having me.
Hey, Cody.
Thanks for being here. All right, let's talk about these amicus briefs that were filed last week. It echoes Coinbase's own arguments, and the motion is to dismiss the case. Talk to us about what's going on here. Why do you feel it's necessary to do this, and where do we go next?
Yeah, absolutely. The SEC, as we all know, has been on a tirade against the digital asset industry. And so cases like this, when they're going after a really good actor like Coinbase, gives the industry an opportunity to kind of voice their opinions and fight back. We believe that the SEC is acting unconstitutionally against the separation of powers and the major questions doctrine I'm sure we've heard a lot about, as well as due process. The SEC has been filing these enforcement actions against the industry without any rhyme or reason and in favor of doing them instead of rulemakings. And so as we have seen in Congress, and we are discussing and debating all of these different legislative proposals that would change the jurisdictional lines of who gets to regulate the digital asset industry, the question is up in the air. Should it be the SEC? Should it be the CFTC? And the SEC is trying to regulate the entire industry, and we thought it was necessary to fight back and claim that that was improper.
So Cody, of course, I mean, with regards to the SEC trying to regulate the industry, they're seeing a vacuum. They're trying to, like all agencies, they try to fill that power vacuum. That said, one of the other cases the SEC has brought up is also against Binance. You have not filed an amicus brief with that, correct? Why not?
We haven't done it this time. It doesn't mean we're not going to, or we're not looking into it. We have been very consistent in filing briefs in the Wahi matter, in the Ripple case, and in Coinbase here that we will continue to call out the SEC's outside authority, or their ungiven authority of just trying to regulate this whole industry in one fell swoop. So it doesn't mean we won't. We don't believe they have the delegated authority from Congress right now to regulate the whole industry. And so we'll continue calling that out until Congress kind of resolves the issue.
Is the issue with Binance more severe than just what they were trading, but how they were managing their money? I mean, do you want to really get into that quagmire?
I don't think we would comment on that. There's different reputational issues, of course, when it comes to Binance versus Coinbase or other players in this space. But we will always continue to call out the SEC just labeling every token as a security when we don't think they have that authority. And that would likely, if we were going to go forward in the Binance matter, that would likely be our argument.
Have you had any kind of productive discussions with any of the regulators?
Yes, actually, we've talked to the SEC, we've talked to the CFTC. I think it's the beauty of the chamber and being the voice for the entire industry. There is still an open door to go in there and talk. There are still people at the staff level willing to engage. However, I don't believe, when we file briefs like this, we're not getting the rosiest reception from the chair. The chair has a vendetta against this industry. I don't think, instances like this change that or help repair the relationship. However, we still have been able to go and talk to staff. So we have had those constructive conversations. So
after you went into the SEC, they didn't charge you with securities dealing?
No, thankfully. Fingers crossed it doesn't happen next time.
Seems to be a thing that happens there.
Yeah.
All the briefs that we mentioned in the introduction cite a recent Supreme Court case, West Virginia versus the Environment Protection Agency case. Talk to us about the relevance here. Why are we referencing that?
Yeah, this is the major questions doctrine. And what it says that issues of economic and political significance have to, if agencies are going to regulate those type of issues, they have to have very clear statutory authority from Congress. As we have seen, is evident by the debate in Congress right now on the jurisdictional lines we talked about earlier on who gets to regulate digital assets, the SEC has not been given that clear authority. And so it is still a major question as a crypto industry. This is $1 trillion industry. And so the SEC taking that unilateral authority and just saying, everything's a security, we believe that violates that major questions doctrine, and it's up to Congress to fill that vacuum.
Except from the SEC's perspective, they're not just, and as I said before, they were filling a vacuum. They're filling that vacuum because the chair views, and he's not somebody who doesn't understand crypto. Right. I mean, this is the last guy I would say Gary Gensler doesn't know a thing about crypto. He actually does. You might not agree with what he believes, but nonetheless, that's the way he views it, is that everything except for Bitcoin, possibly Ether. We don't know his views entirely on Ether yet, but I would venture to say he pretty much thinks that's a security as well. But his view is these are securities. Therefore, I have the right. We have the obligation, rather. The SEC has the obligation to regulate it. Therefore, the real issue seems to be not so much the SEC going in for a power grab, although that's the way it seems, and it's the way I'm pretty sure people at the CFTC might see it. But it could also be that, hey, the real problem is that the legislators aren't saying it's not a security. And if he looks at it and he says, gee, this checks off those 4 boxes in the Howey test, this is security. How come the crypto industry isn't, I don't want to say forceful enough, but, a lot of people, a lot of defense lobbyists get things done. How come you guys haven't been getting things done here? Getting it defined already after how many years in existence?
Man, Lawrence, we're trying our hardest. I think there's an educational gap that we always talk about with this industry. And so we're finally at a point where we're getting lawmakers up to speed. So it was time to take a nice little victory lap before Congress broke for August recess, because it was the first time that we saw legislative initiatives that would define those jurisdictional lines move through Congress. We still have a lot of work to go. Congress not acting and not filling that void is a huge component of this. However, the SEC acting unilaterally and just throwing out enforcement action saying everything is a digital asset security and everything is an investment contract, when we've had now cases like the Ripple case say that's not necessarily true, and doing this in favor of trying to promote rules and actually do their job and go through the Administrative Procedure Act and do the rulemakings and give notice and comment, that's what we're arguing against here. So Congress definitely a component, but the SEC is also acting out of bounds here.
All right. And lastly, what needs to happen next? You mentioned that Congress needs to act. You mentioned the Ripple case, but the SEC is appealing that. What do you think is realistically going to happen next to give us a step forward?
Well, I'm hoping in this case, in the Coinbase matter, that the matter is dismissed, and that will be another win for the industry. And hopefully that will provide more motivation for Congress to act. That's going to be the real resolution here. Congress has to fill that void. Until Congress filled that void, or until there's administration change, which is not until 2024, we're going to continue to have to fight against the industry, against the SEC. There's going to continue to be these enforcement actions. The SEC is emboldened. Gary Gensler has a vendetta against the industry. He has made that very clear. If people thought that Ripple was going to make him back down, I think the appeal was, we could have predicted that. I don't think that's going to happen. He then had the Terraform Labs case, which he is now banking on. And so Gary Gensler is not going to stop. Congress really has to fill that void. And so I'm hoping that the Coinbase matter, once that's resolved, that will provide another motivator for Congress to act.
All right, Cody, thanks so much for joining the show this morning.
Thanks so much for having me.
That was the Chamber of Digital Commerce Vice President of Policy, Cody Carbone. We're going to take a quick break. When we come back, Jacobi Asset Management has listed Europe's first spot Bitcoin ETF. We'll speak to the CEO right after this. Good morning and welcome back to First Mover. London-based Jacobi Asset Management has listed Europe's first spot Bitcoin ETF roughly a year after its planned launch. Joining us now to discuss is Jacobi Asset Management CEO Martin Bednall. Welcome to the show, Martin.
Hello. Thanks for having me.
Good to have you here. Let's talk. First of all, congratulations. It feels like something to really celebrate when we talk about spot Bitcoin ETF approvals these days. Talk to us about what's been going on in the past year. Why is this finally being listed now?
Yeah, so when you are the first to do something, so as you say, it's the first spot Bitcoin ETF to be launched in Europe, and it does take some time. Regulatory approval is one step, but there's plenty of other steps to look at. And I think there's a number of factors that have gone along this journey. The general macroeconomic environment, the crypto market environment were all factors that we considered around timing. But the biggest factor has been what we've done with this launch is we've added a sustainability element to the fund. And what I mean by that is that we have decarbonized the Bitcoin that we hold. So we are ensuring through buying what's called a renewable energy certificate that the energy usage of the Bitcoin that the fund holds is all procured through renewable energy. And so for us, that's taken a lot of work, and working with our partner Zumo to implement that. But it's addressing the environmental concerns around the Bitcoin network. And so, as I said, the energy usage of the Bitcoin network that our fund is responsible for, we've decarbonized that.
And now, was this a requirement to get it passed? I mean, or is this sort of was this window dressing to make regulators happy?
No, it was not a regulatory requirement. Certainly wasn't window dressing. We wanted to ensure that the product that we brought to market was the best product for institutional investors in Europe. And so that's the market we're targeting. And in Europe, I mean, in the US, I think ESG is a bit of a polarizing topic, but in Europe, it's really got a lot of steam behind it and a lot of support behind it. And through regulatory changes that have happened and regulatory drivers, institutional investors in Europe are really required to look at any investments that they make. They have to look at the sustainability, the ESG side of things. And so we've addressed that. And so part of the core strategy for Jacobi, so it's not Jacobi, it's Jacobi Asset Management, is to have the sustainability embedded within all the products that we look at. So any future products we do will also have the sustainability elements front and center as we have today.
So with this launch, what do you expect to happen with U.S.? Do you expect to see U.S. money coming into it? Are there any restrictions for U.S. institutional money, at least, or even for U.S. individuals into investing in it? And do you think that this will give us an indication of what a U.S.-based ETF would look like?
So, unfortunately, there are restrictions for U.S. investors, and that it is not allowed to be sold or marketed to U.S. investors. We'd love it to be able to, but that is a restriction on pretty much all European products going into Europe, into the U.S. Does it have any impact in the U.S.? Now, as you know, and the whole market knows, there's a lot of filings with spot Bitcoin ETFs in the U.S. They're transparent around the filings. I don't see any of them addressing the environmental energy issues that Bitcoin has. Whether some of them will look at our product, see how innovative we've been, and look to implement that, then I think that would be a fantastic endorsement of what we've been doing and the work we've put in. And for me, it's something that they should be doing. We've done it through the conviction we have, and it's also a big differentiator in the product. If all the spot Bitcoin ETFs come to market at the same time in the US, which is talked about by a number of people, that they could all get approval at the same time, I think some of those applications will be challenged in terms of getting assets in. And so they may want to look at a differentiating factor that looking at this sustainability element would bring to it.
Tell me a little bit more about the renewable energy certificates. If I'm an institutional investor and I'm purchasing one of these spot Bitcoin ETFs, how are we ensuring that like this certificate is now helping me meet my ESG goals?
Okay, well, the first thing I'll say is that the fund itself is a pure Bitcoin play. So it's pure Bitcoin beta. We hold as an asset of the fund in custody with Fidelity the Bitcoin one-to-one for the value of the fund. The renewable energy certificates program that we've got is something that Jacobi Asset Management is managing on behalf of the fund. But it is not paid for and doesn't hit the returns of the fund itself. We take the costs of that. And so how does that, the renewable energy market is a tradable market. It's how renewable energy is traded by utilities. So just to give you a bit of an explanation, if you have a green energy tariff and your neighbor doesn't, you will get the same electricity from your utility provider. But the way that your utility provider can say that they've provided you with a green energy, a renewable energy tariff, is that they will go and buy RECs. They will go and buy renewable energy certificates. So they're buying the carbon attributes of the renewable energy in the grid. So we're not doing the Bitcoin mining. It's what's called a Scope 3 emission for the fund. And we don't know the miners whether they've used renewable energy, what kind of energy they've got. So we make the assumption that there's been none, and we buy these renewable energy certificates, as I said, as your utility company would do, to ensure that the energy usage that we're responsible for has been procured through renewables.
Just a rough estimate, what's the cost per Bitcoin to do that?
So the cost of the renewable energy certificate is a separate market. It's not attached to it. Right. So one renewable energy certificate is 1 megawatt of hours, 1 megawatt of electricity. So the cost depends on that market, and it depends on the price of Bitcoin and the hash rate. But it works out around 30 to 50 basis points, I would, currently, depending on where the market and where they are.
And the investor doesn't see that, you're saying. They're doing it one-to-one. So and you said it's coming out of Jacobi's other, like it shows up. Obviously, somebody's paying for it.
So the fund charges a total expense ratio of 1.5%. And
that's part of that.
Out of that 1.5%, we pay all the costs for the fund, and we also pay the costs of implementing this REC program.
About 50 basis points.
Yes.
Okay.
Yeah. So it's a great product for the investors.
So it's about a third of the expenses.
Currently.
Yeah. Okay.
As I said, it's a market. There's separate markets.
Right.
It
goes up, down. Exactly.
All right, and we got to ask you, you were at BlackRock for 13 years previously. Do you think they have a chance at this ETF application here in the U.S.?
Well, with the likes of BlackRock coming into the market and doing a spot Bitcoin application, then that just really gives the digital asset market such great credibility when firms like BlackRock come in and make those applications. The SEC are the ultimate deciders of approval from whichever all the applications that are coming in. I think I'm with the market, and it will happen at some point. When is who knows that at the moment. But it'll be exciting. I've never, in all my time of launching ETFs, I've never seen so much publicity, so many stories, so much anticipation for product launches, and that just says wonders for the future of the crypto market.
Martin, thank you very much for joining the show this morning.
Okay, you're welcome. Lovely to be here.
That was Jacobi Asset Management CEO. We will check on the markets as Bitcoin and Ether remain cool and steady. Stick with us.
People in Congress are investigating aliens, but there's one thing we know. Bitcoin is right now on planet boring. Joining us now to discuss the crypto markets is Tactive Wealth Advisor, Eddy Gifford. Welcome, Eddy.
Thank you for having me, guys.
Thank you for being here. So, of course, this has been the most lackluster summer in a long time. Definitely, it's some of the lowest volumes we've seen all year. Is this going to change? I mean, we're seeing the headlines with ETFs and things like that. Is this it? Is this it? Are we bored? Are we going to just stay boring? Anything happening anytime soon?
I sure hope not. But I mean, what we've seen this year is we've seen these like sideways or almost patterns where Bitcoin's kind of falling slowly, cryptocurrency in general is kind of falling slowly, and then all of a sudden, boom, we get some type of spike, and then we kind of like trail off, and then boom, we get some kind of spike, right? So I think we're definitely poised for a move. Of course, I think a lot of it was leading up to the fact that we had hope that we were going to get some spot Bitcoin ETFs in September. I think that we all know that that's going to be delayed as long as possible. And so, could we continue to see these lower volumes heading into early next year? Absolutely. Of course, if we end up getting any actual approvals on the exchanges and spot ETFs, we're going to see at least volatility, right? At least some movement there, whether it's a hard no or an absolute yes. And then obviously we've got a halving event next year too. So I think we're leading up to some excitement, but there's nothing really spurring anything big right now.
I was just going to say that, are we going to know that things are really dull when people start talking about the halving? It seems like every time things are kind of quiet, all of a sudden we start, did you know there's a halving event? Really? No, I didn't know that. It was just in the white paper. But it's, right. It just seems like every time it's just, excuse me, but I just find it like every time things are kind of like quiet, all of a sudden here, there's going to be a halving event in 3 years, things like that. Like, is that the gauge now? Do we check like mentions of halving in any in any discussion? The more there is, the more boring Bitcoin is.
I think the closer it gets, I think that's just kind of a natural conversation to have. But when you look at things in general, we had a summer where everything was kind of known, right? And everything is starting to become unknown again, right? And what we've seen, at least this year, in March, for example, when banks took a beating, is we saw almost a flight to safety occur, not only in U.S. Treasuries, which you normally see, but we actually saw that kind of happen with Bitcoin. So if that continues to be the trend, if the younger investor is piling more money into Bitcoin when stuff gets a little bit scary, well, stuff typically gets a little scary heading into September. And, we just saw China come in and say, hey, we're cutting rates today. And that's kind of spooked the general broad stock market today. And so I think that we're seeing more unknowns, and that more unknown might drive a little bit more money into cryptocurrencies in general. Still, the highest adopter is Bitcoin, because, that's at least what people hear. And they're like, oh, okay, I can put money in Bitcoin. They don't know about the whole altcoin thing yet. But, we'll take it one step at a time.
Maybe they know too much about altcoins.
Well, there's that too.
When, Eddy, do you anticipate movement in the markets? We have maybe an ETF application, maybe the halving, but when do you expect to see some upwards movement?
Well, we've been sitting in this range for a long time. I mean, we obviously, hit 25 this summer, and now we just feel like we're stuck between 28 and 30. I mean, it feels like we're poised for a move back to 31.5, at least in the next 60 days. Of course, if we break below 28, we can see that move down to 25 pretty rapidly. So I feel like we're due. I don't know why, but I feel like there's something under the surface that's going to provide some movement. I'm not sure what the direction is right now.
You brought up China cutting short-term rates to kind of spur their economy. They're having issues. Nonetheless, the U.S., different track, it seems. Do you think we're going to get a pause for now, or one more rate hike? Or do you think the Fed has just said, you know what, this is fine. We're fine. Everything's fine. We'll just leave it at that. Or do you think we might even see a cut?
I don't think a cut's around the corner. I think, when you look at the most recent inflation print, we're still with, core inflation at 4.7%, which is far, far, far from the 2% that the Fed is targeting. So it would surprise me if we didn't get at least one more raise, unless we have just some crazy data happen over the next month. So I think that we're still going to see one more hike at least. My fear is that one more hike turns into two more hikes, three more hikes, four more hikes, because inflation just doesn't get under control. And that would be bad for all markets. I mean, we saw what happened to Bitcoin in 2022. We saw what happened to all markets in 2022. And if we start seeing, inflation rear its ugly head again and say, "Hello, surprise, we're not really under control," that's where things can get a little bit dicey.
All right, Eddy, we are going to leave it there. Thanks so much for joining the show this morning.
All right, appreciate it. Thank you.
That was Tactive Wealth Advisor Eddy Gifford.
Prosecutors have a new bombshell allegation against FTX founder Sam Bankman-Fried and his use of political donations with stolen funds. Well, stealing our hearts is none other than CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk must-read State of Crypto newsletter. Good morning, Nick. Happy Tuesday.
Good morning. And you.
So, thank you. The DOJ, Department of Justice. What are they now saying about Sam Bankman-Fried?
Yeah, so this is the latest superseding indictment that the DOJ filed. This is basically a response to saying they weren't going to be able to bring the campaign finance charge due to treaty obligations with the Bahamas. What they did was they folded those same allegations into the other 7 charges that they intend to bring to trial in October, so in less than 2 months. A lot of it's what we've seen before, conspiracy for wire fraud and securities fraud allegations, but we do get more detail on the campaign fraud allegations, and specifically, we do have, allegations that Bankman-Fried did, in fact, have a plan to try and get money to both Republicans and Democrats, try and filter pro-crypto lawmakers from anti-crypto lawmakers from both parties, and basically lobby for crypto-friendly rules and regulations. They say that former FTX official Ryan Salami was basically the router, I guess you could say, for donations to Republicans, but that there was a plan to hide those functionally to kind of make sure that they're covering all their bases. So some pretty strong allegations here, and we'll see these I assume tried in October.
So wait, this wasn't about effective altruism?
Effectively altruisming both sides of the political divide.
Well, that's pretty effective.
Nick, explain something for me. These campaign finance charges, previously we heard they weren't going to be included. Now they're getting wrapped up into wire fraud charges, I believe. How is that working? Can you talk to us about how and why?
Yeah, so let's do the why first. That's honestly pretty straightforward. We've talked about this before. The U.S. is basically, keeping to its treaty obligations with the Bahamas on the extradition treaty. The Bahamas, for whatever reason, did not include campaign finance when they arrested Bankman-Fried, and so under the treaty, the Bahamas government has to sign off on all additional charges brought post-extradition, and the U.S. has said that they want to do that for other charges. But what it seems like they're trying to do here is, rather than try campaign finance later on in, potentially March, when they're going to try Bankman-Fried on several other charges, they seem to think, okay, let's just fold these allegations into, some of these fraud charges that we've already brought that the Bahamas has signed off on. And so we'll be able to get the, same conduct, tried, even if we're not going for the specific formal charge. As far as the how, they're basically saying that, the way that the money was moved, the way that it was customer funds used to further these political ambitions, falls under the existing charge. And so they don't need a separate specific charge for that on this, new superseding indictment.
So you brought up Ryan Salami. Apparently he's unavailable as a witness. Who's hiding Salami?
Well, he's apparently going to assert his right to the Fifth Amendment to not answer any questions that might be self-incriminating. I would suggest our audience, kind of draws its own conclusion as to what that might imply. That being said, they do seem to have, the DOJ does seem to have a lot of texts and other written records of what they're alleging. So I think we should still get some more information about the allegations, here.
All right, Nick, we are going to leave it there. Thank you very much for joining us this morning. Always a pleasure. That was CoinDesk Global Policy and Regulation Managing Editor Nick Day. And don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. That's it for First Mover. I'm Jen Sanasi. Thank you to my co-host, Lawrence Lewitton. Thanks so much for joining us. Don't miss CoinDesk's Crypto in Macro Spaces on X, formerly known as Twitter, coming up in just 15 minutes. It's all about using technical analysis in crypto. We return at 9 a.m. Eastern Time tomorrow. In the meantime, you can catch the hash right here at noon. You're watching CoinDesk TV.